Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we got Cowboy Joe back with us. He was on a recent episode. I should have looked up the actual episode, but it was a number of episodes ago. Joe came on. He's back to share more wisdom. For you guys that don't know, Joe has been involved in pretty much everything you can think of, ranging from subdivisions, multifamily, bed crew lodges, Gulffront condos, resorts, commercial buildings, you name it, he's done it. He's really focused on land today, or land development today. So I am really excited to have him on here and talk shop. So Joe, thanks for hopping on.
Thank you for having me on, Gabe. Looking forward to adding value to your viewers. Fire away.
All right. I told you before we got on the show, we love stories here. We like to hear how people got into real estate in the first place. So what's your story? How'd you get into real estate in the first place?
I think real estate and improving real estate was in my blood because I was raised on a ranch and my granddaddy was continuously improving the land. And that's where I got the bug for improving the land. How can I make the land better? And we built our own barns, built our own shops, fences. I don't know how many miles of fences I have built. Don't really want to know. But then I detoured, started doing government contracting, environmental remediation, things like that. And just the challenge of doing that was fun. It was different, but I still wasn't doing the land. And then I basically went into fixing and flipping. You know, everybody tells you have to do fix and flip and work your way up to land development. And I'm like, this ain't it. I just went straight into land development and that's what I love doing. I'm good at it, or I make money at it anyway. People say I'm good at it.
That's a good indication. If you're actually making money, then you probably know something or two.
And the thing I love about land is I used to joke that I don't have any artistic ability. When you put a paintbrush in my hand or music, I have no artistic ability. But when it comes to land, it's a blank canvas, and I do have artistic ability. I can envision what I can put on that blank canvas, and then I can make it come to life. So
absolutely. It's true creativity in real estate starts with development. And that's, it's one of the most exciting things about real estate is just seeing how many possibilities there are with a plot of land, with a building, anything you're talking about. Your creativity can be endless. So, I mean, it's great. It sounds like you got started really at the roots. You were just working the land. That's how you grew up, and that's where the bug came from. I'm always jealous when I hear those stories because I'm like, man, I wish I grew up on a farm and put thousands of miles of fence in. But it ended up you got into development. So what was like your first development deal that you did?
First development deal I did was fairly small. It was what they call a beach cottage subdivision, which is 0 lot lines, setback lot lines, to where you're able to put houses really close together. And it's different than a condo because you do own an individual unit and the dirt under it, but the bulk of the area is common area, where it's similar to a condo. You have shared pools, shared recreation area, things like that. But it's a little bit more leeway than having a condo. And you do have your own personal space.
Gotcha. So what, I've never developed any property. I've done a bunch of flips. I've rehabbed, commercial buildings, but I've never gone through the development process. I know it is much more intensive than doing flips. So can you kind of, as someone who has no experience in development, take me through the process of what it takes to develop a plot of land, from finding the land to getting it, developed and built out?
Yes, the biggest thing is when you find the land, there's a little bit additional due diligence to do besides just planning and zoning and what you're allowed to put on the property. and whether you can up zone or down zone to fit what you want on there. But you have to check for, are there existing easements that could affect you, encroachments? Are there environmental concerns? Are there wetlands? Wetlands really slow down a project from a standpoint of trying to get mitigation credits or having to dodge them entirely, and how much they impact. Let's say you buy 100 acres, but if 60 acres of it's wetlands, then you've got a fairly small footprint that you can develop in. And then another thing that a lot of people overlook is whether or not there's an endangered species that could possibly be impacted by that development, because that creates a ton of slowdowns. Like in the area we Gulf Shores here, on the Gulf of Mexico, we have a white-footed beach mouse that is an endangered species that literally adds a year to a larger development's timeline on getting approvals.
Oh, wow.
Because you have to do studies and everything else. So just knowing that, if you don't know that and then you don't factor that in, it messes your carrying cost up, and you have to have very hard conversations with your equity partners and things like that if you tell them that you're going to be ready to build in a year and it's going to take 2 years.
Yeah, absolutely. So the first step, well, I guess the first step is finding the property before. So how do you actually go about deciding where you're going to be developing?
A couple of factors that I look at. One of the biggest is, where are the growth vectors? Which direction is the area growing in? I think most of your viewers have probably experienced small towns that they put a bypass in and a Walmart, and then all of a sudden the downtown's dead. It's like a ghost town, but the metropolis is forming around the Walmart and the bypass. That's growth vectors, knowing which direction the growth is heading in. And you want to be in front of the growth vectors, not behind the growth vectors, because behind the growth vectors, you're in an area that is deteriorating and property values are usually going down or staying stagnant. Versus if you get in front of the growth vectors, then you have a greater potential for appreciation and demand as well.
Gotcha.
And then another thing to look for is multiple disciplines. Like if the area is a one-trick pony, they have like just one industry and not multiple job industries. What's the potential of a downturn in that industry? Whereas if you have multiple industries, you have a better spread on your risk. Those are two of the biggest factors on location, on where you want to be. And then the next would be, what exactly you're putting in, what is needed in the area, and what's wanted in the area. Because you can provide something that's needed that nobody wants, and you're going to have a hard time selling it. And you can provide what's wanted, but if they don't really need it, you may have a hard time moving it as well.
Yep, that makes absolute sense. So you look for, make sure that the area is growing, and then multi-industry, that makes a lot of sense, because if it's, 100% vacation or travel oriented, then, during the down seasons, you're not going to have, a lot of income. Makes a lot of sense. And then want versus need, that's a good distinction, because I probably wouldn't have thought of that. If I had done my own project. You're looking for something that's both wanted and needed. How do you define that it is that, it meets both, fills both buckets?
That's a good question. Nobody's ever asked me that one before. A want would be like, I want to eat Whataburger every day, but is that something that I truly need? Well, from a health standpoint, I'd say I definitely don't need to do that every day. And then need would be like if you're building a travel center, gas. And that goes back to the multi-industry. If you're building a travel center, both trucks and cars, and like you just said, vacation rentals, if you're relying strictly on gas, If the economy gets bad, people may not go on vacation as much, so you won't have that demand, but you're still going to need supplies shipped around. And the trucking side, the demand for the trucking would be there. That is a need. The truckers need diesel because that's the only way they can move the product. Versus gas would be a want. They want to go somewhere, but if there's a downturn, they don't need to go on that vacation.
Gotcha. So when you're going through kind of the ideation process of identifying the land and what you want to do with it, how do you do that? Do you just like use Google and you look at the land and you think, okay, there's not a lot of so I do self-storage. How about we'll use that as an example? So there's not a lot of storage buildings around this specific location. It's probably needed because there's a multifamily right here. That's kind of how you do it, just by doing manual research, or is there a tool that you use?
There may be tools out there. I'm not familiar with them because I am old school. I do it mostly manual, and I'm fortunate that I've been in this area for the length of time. So from a standpoint of looking for land, I don't really have to look for land. I have people continuously coming to me wanting me to develop something on properties. I've got probably 100 realtors that bring me stuff. And it's pretty much, I'm fortunate that I get to pick and choose what I want to do. But from a standpoint, if you're just starting out, looking, like I said, look at the growth vectors, where things are headed, go to planning and zoning meetings and get with the planning and zoning director of your area, see what they're doing, and also see what their idea is, where they want to go with things. See what they would like to see, because if you can develop stuff that the planning and zoning directors are wanting, your life gets a whole lot easier on getting approvals.
Yep.
And then once you know where they're going, what they want, then start looking for properties.
Yep.
Go to the GIS maps, look at the plat overlays, look for larger parcels that meet the area that you need to make that development, near major intersections, things like that. And then just same way you do wholesaling or fix and flip anything else, start sending cards or text, emojis, emails, however you can get a hold of that owner, skip tracing, whatever is necessary to get a hold of those owners, and just check their interests. It's just a matter of numbers at that point.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Yep. Perfect. And so and as I understand it, I haven't done this, but most municipalities will have a map of their, future development desires, essentially, correct?
Yes, just about every municipality, city, or county has what they plan on annexing, what they're wanting to develop, which direction they're wanting to carry things. And that's, I tell everybody, and it's not just land development, but it's all business. Business is relationships. The more relationships you build, the stronger relationships you build, the more successful you are. Planning and zoning directors and helping them create what they want to create is huge if you're in land development. Developing relationships with high net worth individuals that start to know, like, and trust you, to where you can have equity partners to do projects that you wouldn't be capable of. I mean, that's literally when I started, like I was telling you before we started, I started in fix and flip because everybody said you have to start small and work your way up. And I'm like, no, this isn't for me. Well, I didn't have the money to do land development. I mean, according to most gurus, you're supposed to be worth at least $5 million before you even think about land development. I think I was worth negative $50,000 when I did my first land development project. But I had people that knew me, knew my capabilities, and trusted me. So they became equity partners. And I'm capable of doing some fairly large developments myself without bringing equity partners now, but I still do bring equity partners because that allows me to keep my money free to where I can qualify for more projects. Whereas if I put all of my money in a development, then I'm locked into that development.
Yep.
Whereas if I keep my money to where I can qualify for more projects, I can do 5 projects versus 1 at a time.
Oh, I never thought of it from that perspective. So you keep the money just so you can qualify for the extra loan or whatever it is that, for the project, not to get the return on it.
Exactly. Because okay. I can take, and let's just hypothetically, I give 40% to equity partners to be able to keep my money free. Well, $1 million project that clears, well, let's say it clears $1 million. So I gave 40, so I gave $400,000 away. But if I had taken that money and kept it tied up, I made that 400,000. But if I'm able to do 5 more projects that each one of them net $1 million, then I've cleared $3 million versus losing 400,000.
Yep. No, that makes complete sense to me. So I guess let's go a little bit further. I just took a peek at the clock. We are running low, but I want to dive a little bit further into this. The capital stack is usually something that a lot of, it's when you're just getting into bigger projects, it's something that you really need to start considering and have knowledge of. So what is your typical, when you get into a, $10 million project, what does your typical capital stack look like?
Well, your capital stack consists of equity, traditional debt, and reserves. Most people don't think of reserves as part of the capital stack, but the reserves are the most critical part. And that's actually what bankrupted me the first time, was not having reserves, because everybody teaches you money sitting in a checking account's dead money. It's got to be working. That's BS. That's what I just talked about, was opportunity costs. If your money's working, then you lose opportunity on other projects. But the reserves are critical to make sure that you're able to keep that project going when you do hit hiccups.
Yep.
Then you have equity. That's where you have partners that participate in the upside, but they're also in a risky position because there's not a guarantee on it, but
Yep.
they have a lot more potential for upside. Then you have debt, which is most people are used to traditional bank debt, but there's also other debt you can use. There's private financing. And then one thing we use a lot is accruing interest only loans on longer term developments, so that you don't have that burden of having to make payments in the process of the development side of things. And then several metrics that we use to qualify and determine what the actual stack is on that project. You have DCR, which is your debt coverage ratio. That means just how much money that project's making above and beyond what the debt coverage is. For example, if you have a 1.2 debt coverage ratio, then you're at 20% above what the actual debt is. And then the other is your break-even ratio. And that's basically the same thing, but it's a slightly different fluctuation. That's how far your revenue can drop and still cover your debt. And I used 1.2, and usually break-even ratio is 80%. Most banks want to see a BER of 80% or less, and they want to see a DCR of 1.2 or better. And then, of course, LTV is loan to value. And when they're calculating that, that's actual cost to value versus loan to value, or the value of the project once it's built out. Yeah. They usually loan based on what your actual cost of construction are.
Gotcha. So when you're looking at these, you look for your DSCR or your DCR, debt coverage ratio. is you look for 1.2, and then your break even is about 80%.
That is what most banks look for. I usually try to create a little bit more room. I'm usually in the 1.3, 1.4 on DCR. And I usually don't go above 75% on break even ratio. The main reason for that is rule number one in investing is never lose money. And I broke that rule numerous times early. And I really try hard to structure things now to where I don't lose money.
Mm-hmm.
And I'd like to be a little bit more conservative on things than the bank is. And the banks love it because it makes it easier for them to approve.
Yep. Makes sense to me. All right. Well, thanks for diving into that. We do have to move on to the quick question round, but I just want to thank you for hopping on and sharing all the wisdom.
I enjoy this. I can do it all day long. I love teaching people about land development.
There you go.
Thank you for inviting me.
All right. So we're hopping into the quick question round. And the first question is always about your younger self. So if you could go back to the Joe who, let's say, hadn't done his first development project. He was just out there trying to make ends meet. Go back to him, look him in the eye, give him one piece of advice moving forward.
Focus on the relationships and don't do business with people that you don't want to have a long-term relationship with.
Very good advice. I love that. All right, moving on. The next one is habits. So if you could point to one thing you do day in and day out every day that you feel contributes the most to your overall health, well-being, and happiness, what would that be?
I would say consistency and grit. I know that's two, but consistency is just no matter what volume of action, take action every day, even if it's a small action. And then two, grit is don't quit. You're going to get hit. It's not how hard you get hit, it's how quick you can get back up.
Consistency,
and keep moving.
Consistency and grit. I love it. All right. Now, the next place is location. So the United States, many places, many square miles out there to invest in, which means there's a lot of opportunity. So if you could point to one place that is not your backyard that you're most excited to invest in, what would that be?
I would say Florida has the biggest opportunity that I'm seeing right now that I would be willing to invest in the direction I'd be wanting to head in.
And that seems to be kind of a sentiment echoed across many different guests here, is that Florida is where it's at. I actually just got back from Florida. I went to Fort Lauderdale for the first time ever. I'd never been to Florida before. And as luck would have it, they were having a cold front. It was like 40 degrees. I was like, what the hell? All right. Moving on. The next question is your Superman strength. So we are all gifted with something that we specifically are good at. Everybody is, nobody is out of that. We all have our specific gifts. So if you could point to one thing that is your Superman strength, what is that?
Well, it would be grit. If you ever want to get in a fight with me, you better kill me because that's the only way you're going to win a fight. I don't quit.
Grit it is. I love it. And that leads us to the last question. As I said, you've given us a lot of good advice, a lot of good wisdom, and I really appreciate it. I'm sure people listening and watching do as well. So what is the best way for someone who might be interested in reaching out? What's the best way for them to get in contact with you?
Best way to reach me is my website, and that's www.cowboyjoe.me. It's got my events page. It's got a way to contact me, schedule a one-on-one call if you're interested in doing a deep dive on working with me in land development. Again, that's cowboyjoe.me. That's
all
the
right.
best way to catch me.
Perfect. Cowboyjoe.me. I will put that in the show notes. So if y'all want to get in contact with Cowboy Joe, just go ahead and click a little more in the description. It'll pull down the full description. In there, you can find Cowboys Joe URL. So, Joe, again, thank you very much for hopping on. It's been a pleasure.
It has been a pleasure, Gabe. Thank you so much for inviting me. I look forward to each and every one of these. Absolutely.
And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, hope you have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the three most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you're able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.